Well, hello. Good morning, good afternoon, and good evening. Welcome to this special Innovation Forum webinar held in partnership with Orbitas, which is a Climate Advisors Initiative. I'm Ian Welsh, and I will be your host today. Over the next 90 minutes, we will bring together international stakeholders to discuss the financial risks and emerging opportunities that actions to transition to a low-carbon future will bring. We'll focus on Brazil and the effects on the country's key agricultural sectors of cattle and soy, and to wider global value chains. To do this, we'll be considering the results of two new pieces of research into the future for Brazil's soy and cattle sectors amid climate transitions produced by Orbitas. And then we will hear from a number of different sector stakeholders to discuss some of the implications of the research's findings and some future prospects. And you can see our agenda in front of you now. So I will turn to the first of our panelists very shortly. First, though, please note that simultaneous translation into Portuguese is available. Just ensure you're listening to the correct channel. And we do want to hear from you all. Please put your questions or comments to us using the Q&A function. When doing so, please put your name and organisation. And if you can keep interventions short, they are more likely to be brought into the discussion. So just a very quick word on Orbitas. As I mentioned, it is an initiative from Climate Advisors that combines cutting-edge economic modelling with traditional financial analysis to provide investors, businesses and regulators in the global land economy clarity on the growing risks and new opportunities that are driven by climate transitions. Okay, at this stage, we had hoped to be joined by Eduardo Bastos from the Ministry of Agriculture in Brazil, but sadly he is unwell and not able to be with us on this occasion, and our best wishes to him for a speedy recovery. So I'm delighted to be joined now by Niamh McCarthy, Director of Climate-Related Risk for Orbitas and Climate Advisors. Niamh, welcome.
Thank you so much.
Okay, so Orbitas recently, as I said, produced some reports into the future for Brazil's soy and cattle sectors amid climate transition. So what do you mean by climate transitions and how are these impacting these two important sectors? Niamh.
Yeah, thank you. And I'm glad you asked because climate transitions are generally less well understood than the physical impacts of climate change that we see every day. So your extreme weather, global temperature rises, and so on. So to give some background, climate transitions are the government, the private sector, and the civil society responses to these impacts. So they represent our collective actions to mitigate the worst impacts of climate change. So climate transitions are likely to introduce some disruptive and sector-wide risks, but they can also create some major opportunities. So for example, on the soy side, a climate transition relevant to agricultural sectors is the potential for carbon pricing, which could drive up production costs for the emission-intensive producers, but it could also create some incentives to diversify revenue through land conservation or restoration. Another example is the soy sector potentially seeing demand for plant-based proteins grow as demand for carbon-intensive protein sources declines. And finally, there's an opportunity to mobilize financing for sustainable production as capital providers increasingly link financing to emissions or sustainability criteria. Next slide, please. So now to just a couple of examples on the beef side. We could see technologies in the plant-based and alternative protein sector siphon off some demand for beef, but we could also see technology improvements that make production more efficient and sustainable during climate transitions. And climate transitions could favor deforestation-free and low-emission beef products, as importing countries increasingly insist on climate-friendly products through supply chain due diligence legislation that we've seen over the years. And there are many, many more examples, but this is just to give you a little bit of insight, and we're already seeing climate transitions materialize, and we do expect them to grow over time as the physical impacts of climate change intensify and society is forced to respond.
Okay, thanks, Niamh. So what trends does your new analysis reveal?
Yeah, of course. So next slide, please. So in our reports, we've identified a number of drivers that are likely to shape the soy and cattle sectors in the future with climate transitions. First, the international community has pledged to end deforestation by 2030. And as progress is made toward that goal, the availability of cheap land would decline significantly. And business models focused around sustainable efficiency rather than land expansion would be incentivized. I should also note here that increasing land competition from carbon markets and the bioeconomy would only accelerate this trend. And these developments would likely mobilize financing for yield improving technology that reduces the need to pay high land prices for growing. And another trend we've noticed, particularly in our beef analysis, but also in soy as well, is that declining or slowing domestic Brazilian demand could lead to a growing emphasis on export markets, which are increasingly considering or adopting supply chain due diligence regulations that could grow demand for deforestation-free, low-emission products, but they could also restrict market access for those that don't comply. Another global trend I'd like to mention is around consumer preference changes. So even though we projected a potential increase in global demand for livestock as a whole, the cattle sector is likely to experience a reduction in demand under climate transitions. On the other hand, we found that even though some sources of soy demand could decline under climate transitions, the diverse range of uses for soy makes the sector at least somewhat resilient to the market changes on the demand side. And finally, in a world that increasingly internalizes the cost of carbon, producers that adopt technologies and sustainable practices that increase efficiency and drive down greenhouse gas emission intensity of production can significantly reduce production costs, and they could really gain competitive advantage and market share in the process. So these transitions can present real opportunities, but producers that don't take action risk being left behind, and they could potentially lose market share, as I mentioned.
Okay, so what are some of those risks then?
Yep, next slide. So I'd like to start out here by mentioning the physical risks of climate change would be far more costly than any transition. Both Brazilian soy and cattle sectors are really heavily reliant on rainfall for irrigation. And we've already seen major changes in the environmental factors that contribute to Brazil's dominance in both the soy and cattle sectors. But as these physical risks of climate change intensify and we see the impacts to both sectors grow, climate transitions become more and more inevitable. Next slide, please. And that's why we wanted to see what would happen or what risks would arise if the world limits global temperature rises to between 1.5 and 2 degrees. Even in a pathway aligned with 2 degrees of global temperature rise, which falls short of the Paris Agreement goals, the Brazilian soy and cattle sectors could still face major challenges that could make it difficult for low efficiency and emission-intensive producers to compete. For example, the cattle sector could face contraction with a potential 25% drop in domestic beef production. In the soy sector, we found that production cost decreases driven by technology advancement could lead to a 15% drop in producer prices by 2050. And finally, forest conservation and competition for land from the bioeconomy could lead to a 37% decrease in available pasture land and an 11% drop in available cropland, which are equivalent to the sizes of Afghanistan and Belize. And just to reiterate, this is for a scenario aligned with 2 degrees of warming globally. Next slide, please. So next we wanted to understand the risks of inaction. So we followed up with financial stress testing. So if no action is taken to prepare, we found that economic shock events common under climate transitions could put many soy producers at a more than 60% risk of financial losses based on today's operating margins, while cattle producers could face a more than 80% risk of financial losses. And this means that sustainable efficiency increases and emission reductions, as well as revenue diversification, really are key to future competitiveness and protecting the livelihoods of all those involved.
All right, thank you. So what are the opportunities then for producers and investors, Niamh?
Yeah, thank you. So next slide. Even with all of these risks, we found that soy and cattle producers who adopt climate-friendly practices could significantly increase their yields in a world that limits global temperature rise to 2 degrees. The soy sector could benefit from a 14% rise in global demand for deforestation-free and low-emission soy. The cattle sector could capitalize on a 9% increase in exports from increasingly sustainably focused export markets. And emerging revenue streams could also provide pathways to increase profitability and to build resilience. Next slide, please. And if these sectors are able to take early actions, companies could benefit from a major share of the 88% increase in agricultural capital investment we've projected under 2-degree aligned climate transitions. And just to give some context, this could mobilize up to $157 billion for sustainable technology improvements by 2050. So there's real opportunities here for those who can act.
Thank you. So just while we're on that, so what other scenarios did you consider? I know these, we'll send links to the research to everybody on the call, but just what other scenarios did you consider in the research?
Yeah, so we looked at scenarios between 1.5 and 2 degrees of global temperature rises. So on the 1.5 degree side, we have 2 different scenarios, one that reflects a societal transformation and one that's based on low technology costs. And it's a really innovation-centric transformation. For 2 degree scenarios, we have one that assumes more coordinated policy around the world and one that is based on policies already forecast by the inevitable policy response, which is a scenario commissioned by the Principles of Responsible Investing, and it's used really widely around financial institutions around the world. And this forecast policy response is the one that I've highlighted some of the stats from, but I definitely encourage those here to look at the reports and look at the results of all of our different scenarios, because, you know, as much as we know that climate transitions are inevitable, the scale and the pace of climate transitions has yet to be seen. So using a variety of projections is a really smart idea when it comes to making decisions.
Okay, let's go back to thinking about investments then. In terms of investment, Niamh, how might all of this help secure a more resilient future for cattle and soy producers? How do you think that might unfold?
Yeah, so those who are proactive to prepare for climate transitions have many opportunities. So, and all of these will help to build resilience. One opportunity that the cattle sector could consider is pasture restoration. Over half of pastureland in Brazil is at least somewhat degraded. And we found that soil restoration practices could lead to a 310% productivity improvement, even on severely degraded land. And profitability could increase by almost $400 per hectare on average across Brazil. And these profitability improvements have 2 major benefits beyond the cattle sector. So one is maintaining soil fertility could really allow Brazil to protect its source of competitive advantage in agricultural sectors for many years to come. And 2, the indirect land sparing effect could also benefit the soy sector by reducing land prices. Next slide, please. So pasture restoration is just one example of sustainable efficiency improvements we recommend. We have a long list of recommendations for each stakeholder group in the reports, which revolve around investing in sustainable practices that increase efficiency on existing land, and investing in diversified revenue streams to build resilience and better protect livelihoods under climate transitions. And the key here is really prioritizing long-term profitability when increasing yields, because only focusing on the short-term efficiency can really degrade the land, and it could also increase the need to expand onto more expensive land in the future. We've also highlighted some of the opportunities for supplemental revenue presented by climate transitions, and this could include anything from carbon markets to agroforestry to integrated systems and much more. But the idea here is basically to build resilience through diversification. Next slide, please. So we've also identified a range of actions that soy producers can take to lean into the opportunities and to avoid losses under climate transitions. And most importantly here, producers can invest in sustainable management practices and advanced technology to reduce emissions, to drive down production costs, and to increase resilience to climate transitions. And on the technology side, some current options include precision agriculture, farm automation, and seed selection, but you also have a range of cost-effective, sustainable practices that are already increasing in prevalence in Brazil. And the soy sector can also leverage diversification opportunities, as I mentioned before, and also track emerging sources of demand to build resilience. And finally, probably the most important thing I can communicate today is the need for incorporating forward-looking projections into decision-making, because historical data just isn't able to capture the extent of future climate impacts. And this does require a major mindset shift, but our decisions can only be as good as the information behind them. So regardless of where on the supply chain companies fall or how investors are involved, understanding the risks and the opportunities related to climate change is really absolutely vital for future profitability.
Thanks very much, Niamh. Fascinating stuff. We do have a question, which I think I will bring in straight away. And it's so related to what you've just been talking about, Niamh. And our questioner asks how you define climate-friendly practices for soy and cattle production.
Yeah, that's a really good question. So I've mentioned a couple of examples here. I don't want to define it too narrowly because technology can change over the years. We're projecting out to 2050. So there's definitely potential for more technologies than the ones we've recommended. But generally, I would say the keys here are one, emission intensity. So as we internalize the cost of carbon in the future, the production practices that have higher emissions associated with them will be more expensive if we have to pay for carbon. So that's one thing when you look out on a 2050 horizon that's important. Another piece here is the fertility of the soil. So Brazil currently has a major source of competitive advantage based on many of its environmental factors that contribute to its strong agriculture sectors that make up a major portion of GDP and also sustain, I think, over 5 million people working in the sector. So, I think the key here is if we're able to adopt practices that maintain or improve the fertility of the soil, this will not only make these sectors more resilient, but it will also help Brazil to keep those sources of a competitive advantage for many years to come. So those are just a couple of points here. And then the third piece is, as we think about land use change, if we're able to increase some of the efficiency factors on existing land, it would reduce their reliance on expanding into, land through deforestation or land use conversion, which, may be more difficult and more expensive in the future as well, because there's more conservation policies being adopted. We have more being done in conservation, restoration, carbon markets, nature-based solutions, and the bioeconomy is a big topic coming up in the COP30 next year. So we do have a lot of varied factors contributing to high competition for land.
Great. No, thanks very much, Niamh. And thank you for those questions are coming in. Can I encourage you to please add your name and organization when you put in a question? But thanks very much for those. We will come back to them, but do keep them coming. Thanks, Niamh. We'll move on to talking a bit about the what the analysis means specifically for the future of soy farming. And I'm going to be joined by Yara de Gues, who is a Brazilian farmer. Welcome. And also by Peng from Louis Dreyfus. Welcome. Yara, let me turn to you. So why don't you start by telling us where you farm and what it is that you grow?
Yes, my name is Yara. I farm here in the southern state of Maranhão. It's in northeastern Brazil. We are in the biome Cerrado. We arrived here about 30 years ago, and it was an area covered with native vegetation. Everything was cleared, was open, fertilized, and soybeans is our main crop. That's what we grow here, but we also grow the second crops known as safrinha for corn, sorghum. We also have integrated activity with cattle, beef cattle raising. So that's what we do.
Okay, thank you. So what are the challenges that climate change has presented you?
Yes, we're fully aware that the climate change is coming and it's happening. We see more of climate dramatic changes, heat waves and things like that we have been dealing with, especially this last year. We noticed that. So we definitely need to work on mitigating these consequences. by using conservative practices. We do no-till. A lot of the things that was mentioned here before are already functioning here at the farm. So no-till, cover crops, and that's what we need to do in order to keep producing.
Okay, so what's the climate like? What is in a typical year? How does the climate impact your farming? And what's the kind of typical way that the year looks like in terms of climate?
Yes, we have a very set climate to expect. So we can only have one crop of soybeans a year unless you have irrigation, which we don't. Our rainfall system is it starts in October and it ends now in May. So we're in the last rains over here. So the expectation in this pattern really doesn't change. We have years with more rainfall or less rainfall, but that's what we have. And I don't feel that in our region we're feeling so much the impact of severe weather as we do in the southern states of Brazil and even more in the Midwest areas. For us, we feel it's happening slowly, but it's not so severe as other areas in Brazil.
And where you are, you mentioned you'd had some, you've been suffering from heat waves. What does a heat wave look like? How much hotter is it in these circumstances than it would typically be?
Yes, the heat waves, unusual high temperatures that especially affect our germination rates for soybean crops, especially people that don't use the no-till, they're bare land, so they pretty much cook the seedlings under these conditions. So we cannot really afford to have bare soils anymore. So that's the reason we have been working for years now with no-till systems, and just as a form to mitigate those risks. And droughts, they happen, they're punctual, but they happen. So everything helps that the crops don't suffer so much the consequences of that. But it's changing along the years, and this last year we definitely had a full proof of that.
Sure. And is it your sense that farmers in general in your region are accepting the impacts of climate change and working hard to mitigate them? Is that the way that things are developing?
Yes, absolutely. Yeah, we are in a region of very, we'll say, progressive farming, high technology use, and very sustainable, conscious production systems. So there's no room for exploratory agriculture or even cattle production anymore. So all the farmers here are really in sync of using those technologies and this type of agriculture to mitigate the risks and improve soil health. And of course, we want to produce more, so because costs are rising too, so we need to keep up with that.
Okay, so thinking of the soy sector in particular then, how do you think that the sector can continue to increase yields without encroaching into the Cerrado? Obviously, that's something which has been very much in the news recently.
Yes, we are able to increase fertility of our soils, not only putting in the fertilizers and corrections, but also using crop rotation and cover crops, so to improve soil health, recycling of nutrients. So we can definitely, we have been noticing that we can increase yields, let's say about 5 sacks per hectare in soybean production, just utilizing this type of sustainable production. So we have no interest really in opening more land because it's highly costly. It takes a lot of investment to prepare a soil for a crop production. So what we want is optimize the land that we have as much as we can and use that as our source of production. We really have a lot of land here that, you know, we could actually clear or use, but it's not worth it. So it's better to invest in what we already have.
And just to bring in a question from our audience, are you experiencing any revenue losses from your shift towards more sustainable practices? Is there an initial fall in revenues, or is it maintaining its the same level?
Absolutely no loss. It's just gain. So
good, great. Well then, straight answer to a straight question. Thank you very much indeed. Wei Peng, let me bring you in now. In the light of the climate transitions we've been hearing a little bit about, how do you think that the soy sector will develop?
Thank you for the opportunity to exchange on this topic. Well, in our opinion, we expect the Brazil soy sector to continue to develop, and we see there's still a big expectation of increased production due to the increasing global demand for soy. So of course, we also notice that the climate change is having already an impact on the production, and it will continue to have an impact. So as companies operating in this space, we have also been conducting internal climate risk assessments on the production, and you know, which will feed into the long-term strategy for us in terms of where to place further physical assets, where we would expect to see more extreme weather events to have a positive or negative impact on the yield locally. So these are long-term elements that need to be incorporated into the business strategy and operations for sure.
And where are these considerations coming in your hierarchy of impact or hierarchy of concerns now? I mean, are they higher up? I mean, you know, how are they kind of adjusting in terms of the level of concern that they are how high up the kind of the concern hierarchy they are? So I haven't said that very cleverly, but so, let me say it again. So what I mean is, how much more seriously are you taking these issues now than you were?
Well, I think also that depends on which time horizon you look at. If you're looking at the immediate crop, or you know, in the next 3-5 years, or in the next 10-20 years. So I think that also is important to consider when you look at the hierarchy of risks. But for sure, I think for us, it's very important to incorporate this risk assessment in both our near-term, medium-term, and long-term planning. So again, we want to be climate proof in such a key country where we operate.
Okay, so how are you seeing the future in terms of the transition to a more regenerative approach? What do you think it'll look like?
Yes, I think first of all, it's important to recognize that in many cases, regenerative practices are already a reality. When it comes to soy production in Brazil, talking about, you know, typically non-tillage, this is already, you know, being implemented for decades. This is not something necessarily new. I think what we want to support the producers within our supply chain is to assess on what additional good practices that they can possibly implement to, you know, to further advance on this regenerative agriculture agenda. Well, for us, in one important element in terms of sustainable land use is conservation and zero deforestation and conversion of native vegetation, because I think this is a precondition for any regenerative agriculture that we can possibly encourage producers to implement. So a precondition would be which would be very critical to revert the climate trend is to conserve the existing standing forest and native vegetation areas, and also to find a way to restore degraded native vegetation areas, because of all the climate, biodiversity, and water services that the forest and vegetation could provide for agricultural production in the long term. And second, of course, is to support the existing farming practices to transit further to a more regenerative state. And we are in the process of deploying programs in Brazil to support the producers in this transition.
Okay. What about the drivers then? What are the drivers and incentives that can take this forwards?
Yes, well, there needs to be a clear recognition that any change of practices on the farm level would imply a potential risk. I think it's not fair to expect the producers to bear such risks on their own, and there needs to be a package of services and support to facilitate the uptake of better practices. So in this case, we believe we are well positioned to orchestrate such and facilitate such support. We're talking about financing, talking about inputs, talking about technical support and knowledge sharing. So these are the key enablers that we believe will be needed for the producers to really adopt changes and then to come out as a more resilient to put further climate change impacts and more economically viable in terms of their business models.
Great, thanks very much indeed. Just a quick note to everyone on the call. I forgot to mention that you can, of course, upvote the various questions that are appearing in the Q&A box. So if you like a question there, click the thumbs up symbol and it will push it up the hierarchy of upvoted questions. And I will be coming to some of those questions a bit later, including some that have already been answered live by some of the Orbitas team behind the scenes. Question back for you, Yara, very quickly, just a clarification. When I asked you about costs of transition and yields, you said that you hadn't had any impacts of transitioning to a more regenerative approach. But a question asking here, have you had any losses due to climate stress? So a slightly different question.
No, actually, with the practices we have, we're mitigating those problems. So today, with the no-till and the cover crops and all these practices we have been using, we can stand a 15-day drought spell or a 20-day without losses, basically. So if we have a bare land, like a new open land that has nothing in it, no structure, no cover crop, then you really feel the heat, basically. So you can have a lot of loss that way. But no, definitely it only helps. It really saves the day. Yeah.
And I guess for Louis Dreyfus, then, that's a sort of response it's good to hear, because you can see the benefits of doing the changes, of bringing the mitigating measures, of transitioning to a more regenerative approach. So I guess that's a sort of that is good news for you guys.
Definitely, I think it has to be farmer centric. Well, the whatever support needed by the producer, that is the starting point of this discussion. I think, yeah, for that reason, we have been engaging with the producers supplying to us to really understand, again, the local context. Every farm is different. In each region is different. So it needs to be tailored to the specific needs and the local realities for each farmer in the program. To make it really viable and concrete for them. So instead of imposing a template, yeah, that is not the right approach in our opinion.
Great. Thank you so much. We can come back to some of those points a little bit later, but thank you very much indeed. Let me turn now to a bit about what the analysis from Orbitas means for the future of cattle farming in Brazil. And I'm delighted to be joined by Vicente, who's a Brazilian cattle farmer, and also Gracie from Minerva Food, of course, a big beef exporter. Welcome to you both. Vicente, let me ask you the same question that I asked Yara. So, where do you farm? And I guess what livestock do you have and what else do you grow?
Hi, Ian. Thanks for having me here. It's a pleasure to talk to you today. I'm Vicente from Mato Grosso, Brazil. I'm CFO at the Botovera Group. We are a family-run business with almost 50 years of history. It all started with my father as a truck driver in the south of Brazil. And together with his brothers, they managed to develop a fleet of transport and moved to Mato Grosso in the 80s, looking for new opportunities. And at the end of the 90s, about 25 years ago, they started also the cropping business and agricultural business, producing soybeans and corn. And about 10 years ago, we really digged into livestock operation integrating pasture and crop rotation in our system, adding a lot of opportunities in the financial department and also in a sustainable perspective. And we are now farming about 35,000 hectares of soybean and corn, integrated with livestock of about 20,000 heads of cattle. We have from cows to calves and the fattening in the feedlots and the whole system. We still have the trucking business, by the way, about 300 trucks now, 800 employees in the company. This is us in a nutshell.
Thank you. Thank you very much. Let's come back to some of the impacts of those practices you mentioned in a second. But I'm keen to hear how climate change is impacting your farm and your operations.
Yeah, I'll go in the same direction that Yara said and Niamh as well. We are not seeing much of the climate change itself in the weather perspective, but mostly in the business change. When we talk to clients, suppliers, governments, NGOs, banks, it's pretty clear that sustainability is the way, but unfortunately it's not clear what is sustainability. So we have different concepts, we have a different list of requirements from each of these partners. And to be honest, farmers are feeling a little bit trapped or lost in the middle of misconcepts. And there's an opportunity here because we farmers, we want to sit on the table. We want to be a part of the discussions. So initiatives like this, forums like this is unbelievably good for the farmers to express our opinion, show a little bit of the best practice that we're doing, and also learn more of the key challenge that we need to face for the future. So I would say climate change is actually changing the way we do business.
Interesting that you say that you're not seeing the dramatic changes yet. I mean, Yara mentioned there were significant changes happening for her in the Cerrado in terms of greater heat and everything else. So where you are, you're not seeing these dramatic changes as yet, but it's something that you're mitigating against for the future.
Yes, I would say I cannot see a trend in terms of weather change. Of course, there is volatility in rains, in heat, in temperatures. We have La Niña, El Niño. We have many climate effects coming. Some years more rain, less rain, but I cannot assure that it is getting worse or better. It depends on the year. So we have better years and worse years in terms of climate. We also run the whole package in terms of no-till systems, integration and crop rotation, keeping the preservation zones intact and keeping the river safe and protecting the soil, looking for biopesticides bio inputs in order to help protect the soil, which, by the way, it's our greatest asset. If you think about farmers, all we have is the soil, so we got to take a good care of it. Yeah.
Okay. What sort of incentives would you like to see in place then to help the cattle sector in the future, and particularly in terms of transitioning towards a more climate-aware approach and also one that mitigates against climate change risks?
Yeah, this is a great question. I think we have a lot of opportunities in Brazil. If you check the area of Brazil, about 67% is preservation zone, 9% is crops, and 22% is used for cattle. And most of this cattle area is extensive cattle, so ineffective. Old farming is not the polite term, but something like that. And we need to develop and convert these areas into a more intensive production system. So in order to convert that to a crop pasture integration, we can add, for example, a corn pasture integration, and we produce corn that's gonna go for bioethanol. It's a biofuel. It's good for the environment, and it's also sustainable. We can produce DDG, which is a byproduct from the bioethanol, when we can use on the farms to feed the cattle. And we still have the pasture as a second crop in the same plots, and face a dry season, for example, with a green pasture, and help the cattle develop better in the dry season. And but we still lack a lot of investments in terms of technology. We are talking here we have the best genetics, we have the best agronomic department, we have integration, we have all this stuff, but we still lack on 4G connection, for example. We still lack on good roads. We still lack on a steady energy supply. So it's the basics that are making the cost of the farms still higher than other places in the world, for example. And I would say as well that finance costs are still high in Brazil, and any financial alternative that we can have to lower the costs of investments, that's the only that farmers can convert these degraded soils into a more effective production system. So,
okay, thank you very much indeed. Again, lots that we can come back on. I'd like to bring in Gracie now. So, Minerva Food, a large beef exporter, do you recognise the opportunities that the Orbitas research has highlighted?
Hi, Ian. So firstly, many thanks for the invitation to be here today, and congratulations on this study. I was actually really happy to see it and see all of these opportunities that were highlighted. And I would say that as Minerva Foods, we don't just recognise these opportunities, but we're actually already investing heavily in order to realise and capitalise on them. So in 2021, we launched a program called the Renove program, for which I'm responsible. Basically, the program engages with our supply chain, so with the ranchers, to support them to implement these kinds of best practices, which Vicente has just listed a number of them. So we try and bring together an ecosystem of partnerships which enable this kind of a sustainable transformation at the farm level. So working together with technical assistance and capacity building organisations, with financial institutions, to try and develop these lines of rural credit which recognise that these farmers are participating in projects that are fully monitored, using scientific methodologies that are credible and transparent, and then rewarding them with these better conditions for their rural credit. We also are connecting farms to the voluntary carbon market. So we're working together with farmers to implement best practices and measuring the gains in soil carbon that are being had, and also the gains in biomass. If we have these integrated systems where we're putting in also the forest component. So Vicente mentioned the integration between crops and livestock. There is also the possibility in some regions to add rows of trees into these systems, and that really, really makes a great carbon balance for the farm. It creates well-being for the cattle, and obviously it's drawing even more carbon out of the atmosphere. So the Renove program is working with many farmers throughout Brazil to try and support this transition, connecting them with certification programs, with carbon credit programs. And this way, we're creating the incentives that are required as well for the farmers, because what they always ask is, what's in it for me? Why am I going to take on all of this work and extra loan? And so we always talk to them about the gains in productivity that they're going to get, the gains in resilience that they're going to get. And I think that Vicente and Yara already talked about that sustainability at the farm level in terms of the practices being implemented is also financial sustainability for the farms.
So what's the potential of the voluntary carbon markets then, do you think?
I think here in Brazil, it's huge. We've heard some numbers about the hectares of degraded pasture that we have, and recovering this degraded pasture automatically draws down carbon from the atmosphere and stores it in the soil. We have barriers in terms of some methodological approaches within the carbon credit systems that we are required to use nowadays, but I see really, really good technological advances on the horizon. I don't think it's too far away, and I think that will enable us to scale up much more cheaply and easily.
How do you think then that the cattle sector will respond to these climate transition challenges? What do you think you're likely to see?
Look, I think that as Vicente mentioned, farmers and they need to be at the center of this conversation, and they want to be at the center of this conversation. Here in Brazil, generally, farmers suffer very badly with their reputation because of a few bad actors that we have. No one can deny that. However, the great majority are investing heavily in improving their productive systems, and they want to be engaged with all of these markets which are looking for deforestation-free products, which are looking for traceable cattle. That's going to bring even more financial return for the farmers, so that the incentives are there. And I think that the farmers there's just a few barriers still in place. So some of them have already been mentioned, but the financing aspect is still problematic. We have some capacity building which needs to happen, particularly when we talk about smaller and medium sized farmers. The larger ones tend to be quite well advanced in these systems, and we need to find structures that can bring all these kinds of technologies and innovations down to the smaller sized farmers.
All right, so with all that in mind then, where do you think the sector will be in 5 years' time?
I think that we're seeing a really great mobilization at the moment in Brazil. We're seeing quite strong action from the government in terms of traceability within the cattle sector. We're seeing mobilization from the private sector together with NGOs and the government to prepare for the new EUDR. So I think that the next 5 years, it's going to be a kind of a make it or break it moment for Brazilian agriculture. But I really think that all of the pieces are in place, and it's just a matter of grabbing hold of all of these opportunities that there are. So I think it's a really positive outlook.
Okay, just to follow up on that, and it's a question we've had in from on the Q&A. What about medium-sized cattle? I mean, cattle companies. It sounds like we have talked quite a lot about the really big producers, which are, of course, easier to support, easier for them to get access to finance. What about smaller producers? How are you working with them? Yeah,
so the supply chain of Minerva Foods is already quite highly technified. We are an export-driven company, so we have specific requirements in terms of the quality of the cattle that we purchase, the size that they have to be, the age that they have to be, and the quality of the beef. So our supply chain has already made great improvements and investments in creating these productive systems. In order to be able to reach down to the smaller and medium-sized ranches, I think we really need strong interventions from the government. We need to continue with these rural credit programs, which the government already has in place, and also strengthen the technical assistance for the smaller and medium-sized producers.
Great, thank you very much. Let's come back on there as well. Let me turn now to think about the future of agriculture and the innovation and opportunities as a whole. And joining me now is Marta from Verde Capital and Veronica from Santander. Thank you very much. Great. Thank you for joining us. Thanks also for your patience. So, Marta, let me turn to you first. What for you then are the primary opportunities for sustainable growth in the soy and cattle sectors in Brazil?
Hi, thank you for having me. First of all, I think Brazil it's a powerhouse. We've been working within agriculture for such a long period. I mean, very high productivity rates and yields. And I think right now we do have a huge opportunity, as we do have roughly 100 million hectares of degraded pasture land in Brazil. This is equivalent to Germany and Spain together. And this has already been deforested in the past. So I think right now we need to see this as an opportunity, because this is along different biomes. And we do have the possibility to, I like to say, feed the world without chopping a tree, because we do have huge areas that are productive if they are well treated. So here we need to align what everybody said before. So credit, technical assistance, and empowerment of especially the small and medium farm holders, so they can get into the transition agenda in a competitive way, and at the same time de-risking their transition, because today they face the risk alone, and we need to give them the whole toolkit, so they have credit plus technical assistance plus enabling support, and then they will have all their needs to transition.
Peter, thank you. So taking that forward a bit then, what does a good agricultural business opportunity look like, do you think?
Yeah, so today when we see the large farmers, they're going to this agenda by themselves, not necessarily because they love regenerative or impact agriculture, but because it's a very good business on their own. So when we see the large ones, they have access to capital, to credit, and we are talking here about a different credit line. It's a tailored one. It's not a traditional working capital credit line. We need to have longer periods. We need to have grace periods. So we're talking about specific credit that is tailored to the different biomes and crops and sizes of the farmers. And when those large ones, they have access to this kind of capital. And at the same time, they do have the technical knowledge to do the transition by themselves. They have high technology within the farm. They have the bright people, the technical knowledge. And when they go into this agenda after 2-3 years, what they see is a very high productivity rate, better prices of commodity, so they can trade their commodities as green commodities and traceable. They many times lower their costs and increase the resilience of the soil. So they increase the use of bio inputs, and then there is also the nature working on their favor. So this is also relevant. And the third pillar would be land appreciation, because you turn a degraded pasture land into a high productive land, and then you end up with the three main stars that allow them to do this. So I think right now it's a matter of understanding that it was like energy 10 years ago, where we didn't have renewables, so we didn't have track record, we didn't have the business plan. So then we had more concessional capital, BNDES, development banks stepping in and taking this first move. And what we see right now is that we do know that this is economically viable, regardless the additional revenue stream that carbon might bring. So how can we prove this economics and then have a crowding in effect with other funders?
And what do you see as the potential from the voluntary carbon market center? We've talked about it a little bit already, but where do you see the role of the voluntary carbon market?
I think we need to think with innovation also here. So how can we look at insetting? How can we look at soil carbon? How can we bring more technology in place so we really make this available to smallholder farmers? Because today you need large projects. So you generate the formal carbon credits. So I think there is a lot going on. Maybe we don't have all information yet. We do have huge technology in terms of above the ground, but still soil, it's a challenge. So I think it's a matter of time and development.
Okay, how can investments be structured to encourage greater productivity then on existing lands? What are you, when you're working on and bringing together these investments, how do you ensure that the structure is right?
I think it's about aligning the incentives. We do have many stakeholders involved, and we really need to make sure that everyone has the right incentives to do that. So what's the incentive of the corporate? What's the incentive of the farmer? Or what's the incentive of the investor? And creating those incentives will make sustainability priced correctly, and then we will create a positive flywheel. So you integrate credit accessibility with green practices, and then the more sustainable you are, the better conditions you have, and then the carbon you generate creates additional revenue streams, so you can create a kicker to investors or an insetting mechanism to the corporate. So many different possibilities, but at the end of the game, if we do not have the right incentives, it will be very hard to move at the pace needed.
Okay, thanks very much indeed. Veronica, turning to you. Welcome. And how does Santander engage in the agriculture sector then? What is your role as Santander?
Perfect, thanks, Jan. So firstly, thank you for the opportunity to speak here and discuss this matter, which is highly important to us as well. So obviously, we are a global bank with a very large presence here in Brazil. So we have over 50,000 employees here locally, while also being a very global bank. But so we do have a large agribusiness internally as well. So we provide agro support both in corporate sector, but also for consumer business. So also for the small, medium-sized farmers as well. So this is one branch of the operation, obviously very important to us. But when we think about sustainability specifically, and we think about the sustainability related to the agri sector, we have also restructured within the past years how we are also organized internally in terms of sustainability. So we brought the sustainability department closer to the business in both different ways. So there were also day-to-day transactional business in which were already doing several sustainable transactions, and we needed to also flag them and tag them and be more conscious about it. So this was something very important in the business, and we want to do a lot more. But also we realized it was a major challenge in addressing new issues and trends. And I know in many of the panels before, we talked about financing and the issue of actually giving access to credit to small farmers, medium-sized farmers, incentivized credit, which is also very important. We can talk about it a bit more in detail. And we saw this challenge, and we came up with also a different department, which is where I'm sitting right now, which is called the Sustainable Innovation. So it's where, as Marta said, we come up with this more tailor-made solutions to address specific issues, specific problems, and how can we reach larger impact while addressing these issues in a more innovative and creative way.
Thank you. So where are the areas of opportunity in the soy and cattle sectors then for you specifically?
Yeah, so I mean, obviously there's several, and it starts with, well, first, when we analyze the sectors in Brazil, while they are also maybe the biggest detractors in terms of emissions, they have already a very positive agenda. So they have already many practices, as it was mentioned by the study as well before. There are many practices that are already being implemented, that are already in place. There are several other practices that can also really improve how the production is done here in Brazil. And this is already mapped and well known. And there are several other technologies that might appear in the future. The main challenge is to implement them. they're quite costly. So not all farmers, and we talked about the difference for larger farmers to medium and smaller sized farmers. So sometimes it can be a challenge for them to actually invest all that money, to have sometimes a little increase in productivity. Sometimes it's even just to decrease their emissions. So it's still a challenge to have all these investments and having costly implementations related to it. And how can they finance themselves? So we realized that this was a challenge. And we came up with several solutions in which we can address this challenge and be able to also finance these producers into this transition. And these also, they realized as opportunities for us as well, and business opportunities with our clients and our partners. So the main things were, well, when we want to achieve the smaller and medium-sized farmers, and we want them to go through this transition process, we want them to invest in the implementation of these practices, we need to give them access to credit at different conditions than they would bilaterally in the market normally. So we're talking about lower interest rates. We're talking about more extensive tenors. We're talking about different conditions in general. And to achieve that, we have to have a combination of two factors. We have to have strong risk mitigants for the structures we're building, and we need to have other types of economical incentives as well related to it. And these two things, there are several creative ways to come up with it, but these are the things that will actually allow us to reach these different conditions and actually tackle all these potential opportunities.
Okay, thank you. I wonder, when structuring investments, how do you build in the incentives for farmers to ensure they can deliver deforestation-free and conversion-free supply? This actually reflects some of the questions that are coming in the Q&A as well.
Yeah, and that's a great point, because when you think about deforestation, conversion-free production, you're not really talking about implementing another practice that could result in an increase in productivity or an increase in profitability. So you're talking about just preserving the forest standing. And until now, and this is very unfortunate, but it's the reality, until now, keeping the forest standing does not have a very beneficial economical value for the farmers as the production does. So how do we give an economical incentive to these farmers for them to preserve the forest standing? Well, they need maybe to even spend more in that, and they won't have any increase in productivity or anything related to that. So what we thought was, and as I was saying before, we have to combine this risk mitigants with the other economical incentives to reach the structures we're talking about. So many people are talking about right now in the market about blended finance facilities. And why is that maybe an important way for us to move forward as well? Because Santander as a bank, and maybe lots of other banks as well, obviously we deal with commercial capital. So in order for us to have a sustainable solution as well, so something that could last over time, and we can do many of them, we can achieve a level of risk within these structures in which we are able to absorb as well. So how do we do that? If I'm talking about smaller to medium-sized farmers, these farmers have trouble now accessing the market at lower interest rates. They usually pay very high interest rates bilaterally. Their credit assessments are not so great. So how can we firstly overcome this first challenge? Well, maybe we have been working on looking at them in a portfolio type of approach. So working with several different farmers at the same time and not looking at them bilaterally one by one. This helps mitigate a lot the risk. When I look at the portfolio in general, I'm able to also work on dividing this investment in tranches, which really helps to share actually the risk with different investors. So this has been something we are focusing on as well. So how can we come up with a larger portfolio of farmers? Inside them, there could be small, medium-sized, large-sized farmers. And then how can we divide those investments in tranches so I can share the risk with different investors? We have foreign impact investors, multilateral banks that are very interested in also financing sustainable production in Brazil. So how can they also join these structures, share a little bit of risk, and we can leverage the volume as well. So this is one example. And supply chain companies, such as the partners we've seen here today, Minerva, Dreyfus, they're very important in this equation as well. Because one of the other incentives we can bring is the consumer market maybe be willing to pay premium prices on the products that are sustainable production. Maybe we can lower some costs related to the supply chain as well with input providers. So there are several other ways we can also bring economical incentives to these farmers to go through this transition. So this is how we're trying to look at it.
Great. No, thank you. Thank you very much indeed. Right. Well, I'd like to welcome all the panelists back now. As we're going to move into some Q&A through for the next 25 minutes or so down to the end of our time. So welcome back, everybody. So, and thank you very much for your questions. Some of them I know have been answered by the Orbitas team in the background. So I'm going to focus initially on the questions that are still fully open. And thank you for those questions, and also thank you for your upvotes. It'll surprise the Innovation Forum team, not in the slightest, that a question on the European Union deforestation regulation has been the top question. We've had a number of events and webinars where EUDR has been very much the hot topic as it comes in this year. So our questioner asks, what changes the farmers are already undertaking to comply with the European Union deforestation regulation, which requires, of course, that products coming into the EU markets have no risks of deforestation. Okay, let me turn that firstly to Yara then. How have you been engaging with the European Union deforestation regulation? Is it something that's on your radar?
Yes, absolutely in our radar. And I think for us Brazilian farmers, as you mentioned before, sometimes we tend to have a bad reputation internationally. We have participating in quality programs, sometimes sponsored by the soy buyers for export, the big companies, because we really want to differentiate ourselves from the way we farm, from the predatory farmers. You know, we don't want to be known as the guys that do the illegal deforestation or anything like that. So we want to be in a bucket of the good guys. We want to show what we're doing right. And we understand that sometimes what the Europeans want, it's kind of unfair to us in a way, but we also agree with that sustainability is important for us, and us as owners of the land, that's what we want more of anything, is conserve what we have. And of course, be able to sell our product. And so we do conform, but we want those rules to be reasonable over us, something that needs to be realistic and not, you know, just out of just shop everybody down, and that's what we want. So, but definitely we have been working already in that same line of sustainability that everybody is wanting from everybody else. So,
okay, thank you, Vicente. Do you want to answer as well? So, how much of the impact of the EU deforestation regulation is on you, and what are you doing to engage?
Yeah, I'm the same opinion of Yara. I think this is one typical example where farmers were not on the table when the law was made. And at the end of the day, Europe might have increase in the food price because of the restrictions in terms of buyers. As a farmer myself, I have not deforested haven't cut any trees since 2007. So almost 20 years that we are consolidating in the area that we are. To be honest, I don't see deforestation as a new way of doing things, or I don't have any incentives to go in that direction. Like I said before, Brazil has a huge area of degraded soils that we should convert, that we can increase our productive in the areas that are open already. But I don't like the way Europe is treating the subject, so to say. I agree with the sustainability direction, but I think we should have more conversations about the best way of doing that. So that's my opinion.
Thank you very much. And your opinion reflects very much some of the conversations we've been having over the past few months as well. Generally, anyone of the rest of the panel want to come in on the impacts of EUDR? Just raise your hand or indicate. Gracie.
Hi, thanks. I would just like to say that it's really not fair to place the onus of these kinds of regulations in the farmer's lap. It can't be the farmers that respond to this. It has to be a response that involves every single actor in the entire supply chain. It's going to have really big financial implications, and these kinds of things, they're really important. It's important signaling because it makes people move. But I think that we really do need a coordinated national government response in terms of traceability, particularly within the cattle supply chain, in order to facilitate this for the farmers, because there really isn't any incentive for an individual farmer to put on an ear tag on a cattle, considering that may or may not be belonging to a supply chain which is going to get some kind of an incentive from an exportation market. So I think we need to consider the role that everybody has to play in this. I mean, Minerva Foods is doing a lot of actions in our supply chain to work together with farmers with these traceability projects as well. But we really need support from the national government in terms of access to data to enable us to do this. And also support as well from, for example, the European Union, which has made a very obscure kind of law, which is really difficult to interpret, and we're not quite sure what it is we need to prove, to show. So I think a little bit more clarity around this, and probably clarity developed in conversations with all of these stakeholders, would be the best way to go.
Thank you. Just Gracie, while we're talking, just to respond to a question that's come in on the Q&A, what do you do at Minerva to ensure that you don't have these sort of deforestation risks yourself in your supply chain? Clearly, it's a sector that's had risks in the past and is associated with such risks. What are you doing to ensure that you remove those risks from your supply chain?
So we have a socio-environmental monitoring platform which uses satellite imagery. We have every single supply farm registered within this platform, so we can see the perimeters of the farms. And every time our cattle purchase team visit a farm to perform a purchase, that farm has to be put through this system under a number of different criteria. So we look for any kind of deforestation, illegal deforestation. We look for overlap with Indigenous territories, with the territories of other types of traditional communities. We check land tenure, we check slave labor, we check a number of different socio-environmental criteria. And if any of those criteria are non-compliant, the farm is blocked within our system. So we are not able to purchase cattle from that farm. So we do that purchase by purchase, and that helps us to make sure we don't have any illegal deforestation in our supply farms.
Okay, thank you. From Louis Dreyfus, you wanted to come in?
Yes, well, I can only echo what colleagues have already commented. Of course, we understand and we support, the spirit of this regulation is to, the intention to support the elimination of deforestation, but in terms of the implementation itself, this is creating quite a lot of logistical and operational burden. If you look at the Brazil soybean production as of now, if I may make a guess, 99% of all the soybean produced in Brazil effectively complies with the EUDR zero deforestation requirements, because the cutoff date is December 2020, is fairly recent. For any land clearing that has happened after that, and with the soybean planted, there's not much at all. So we are talking, but then the requirement of the physical traceability to farm, and the physical segregation from the conventional soy or unverified soy, this is creating a lot of logistical burden, where we simply have to create a isolated flow of verified and traceable deforestation-free soy to Europe, from the rest of the flow going to other markets. So yeah, I guess the point is by adding this operational burden, therefore, the cost of the supply chain operations, it's not really helping in any way to address the actual deforestation risks itself. So a lot of financial resources are being channeled to enhance the infrastructure of the supply chain. So that's why we believe that the European regulation needs to be accompanied by pairing mechanisms to really help address the root causes of deforestation in addition to this regulation.
Thank you very much indeed. Niamh, you wanted to comment?
Yeah, just briefly, I just wanted to mention that the EUDR is a prime example of a climate transition that we're discussing today. So I'm really glad we're having this conversation. And just to mention that there are two types of climate transitions. One is over time gradual change that allows stakeholders in those industry with the optimal time to respond, to react, and to meet the timelines of those transitions. There are also disruptive climate transitions, which are increasingly likely if action is later. If we have more physical impacts of climate change that happen and then action occurs very suddenly, the disruptive impact and the clunkiness of some of those climate transitions or actions could be much more destructive to sectors by not allowing the time to react. So I would just mention that that's something to consider with increasing climate transitions even beyond the EUDR. So I think these conversations are vital, and I hope we continue to have them.
Okay, thanks very much. Vicente, a question for you I want to put to you, and in fact involves some others as well. Our questioner asked, how do you see your role as a large farmer to work with and help smaller farmers in your value chain and perhaps your neighbours? How do you see your role in encouraging them, particularly when they have there's some disincentives perhaps for them?
That's a great question, and I think our role is to share the best practices. Like I said before, maybe a little bit bigger farmers, they have access to the better technology first, and they have more room to discuss it with better agronomists and better teams. And I think our role is to participate in these events and to promote the integration of the farming business in Brazil through associations. And accessing and sharing, our best practices and what's working and what's not, the tests that we've been running to the smallholder farmers as well. Another business that's big in Brazil is the cooperative model. That's where smallholder farmers can access better technology and better knowledge. And our integration with the cooperatives also works in many different levels. So I would say this is our role. It's using our maybe a little bit stronger voice to help speak for them as well. So
thank you. Yara, did you want to comment on that?
Yeah, I think Vicente got a very good point that we need to share our knowledge. We are a fairly medium-sized operation here. We're a family operation, not as big as Vicente, also family operation. But we do, I'm part of an association here locally that we do provide transfer of technology for smaller communities. A lot of them like people that got donated land from the government and things like that. So we try to bring knowledge and training and to these communities so they can participate in the market, even if it's locally in the city. But they get organized in cooperatives as well. So that's really the way for them to be part of the whole sustainability system.
Thank you. I wonder if Veronica and Marta, you have a comment here. How do you work with your customers, the likes of the bigger farmers, to then work with smaller holder farmers, which are part of the value chain? How do you go about that, Veronica?
Yeah, so well, obviously we do have bilateral contact with both the smaller and larger farmers within our agribusiness sector as well internally. Many people asked as well on the Q&A I saw about the social environmental criteria as well, related to how do we finance these producers. And this is both applicable when we're talking about bilateral financing or even structured finance solutions with more portfolio approach. But in both cases, we do have very strong environmental social criteria. We actually were one of the first banks to monitor 24/7 live the map biomas to see if there is any deforestation occurring on any of the lands that we do finance. So before we can see we give any financing to anyone, we have a due diligence on both the CPF, CNPJ of each one of these farmers, especially to look for embargoes and things related to, labor issues or anything like that. If that's the criteria for even having a relationship with any of these clients, just to start with, when we think about credit allocation. And then when we think about financing and giving credit to specific farms and for the rural credit, for example, we do monitor each farm daily for deforestation. So we do have that due diligence in place. And if you all want more details, I'll be happy to share. When we think about sustainability, we have an European taxonomy now that we follow, which is obviously because we do have head office in Europe. So whenever we talk about green solutions or sustainable solutions, then we're talking about even more than the normal social environmental criteria. Then we're talking about looking into deforestation free, and we're talking about both legal and illegal deforestation. We're talking all these aspects as well. So this is a different thing. But I mean, when we think about, and as I was mentioning before, Ian, to your question, when we think about how can we support more the smaller and medium-sized, then I'm thinking more of these structures in which I look at a whole portfolio. Because it's hard for us to look individually to very small, medium-sized farmers and be able to give them very attractive competitive conditions. But when I look at a portfolio, when I bring in partners from the supply chain to also work with me, this really helps in how can I actually give them better conditions than they would normally access.
Thanks, Veronica. Marta, do you want to comment on that? Is it the kind of portfolio approach? Is that one that you recognize as being successful?
Yeah, sure. So the first thing is working with the corporates and their supply chain. So when we do have the corporate, we can have this portfolio approach that Veronica mentioned, but we also have a better origination channel. So we make sure we target the right farmers. And then we couple with technical assistance. So sometimes it's the corporate itself that is providing technical assistance. Sometimes it's a specialized company, and this varies. And then there is also the commercial relationship between the farmer and the corporate, which makes a huge difference. And when we put everyone together, we're able to structure a blended finance, for example, deal within capital markets and then bring institutional investors, and then have a concessional tranche where it can be the corporate, but also with other concessional investors and long-term investors that are willing to make this role, and then create the track record. So we need less and less concessional capital as the structure evolves.
Okay, thank you. Vicente, you want to come in very briefly?
Yes, I just would like to add another point that's certainly it's often forgotten. It's when you talk about smallholding farmers, especially in Mato Grosso, we need to bring the table succession planning and governance, because many of the farmers came to Mato Grosso in the 70s, 80s, and they are now becoming 70 years old, 80 years old. And we almost don't work in succession in the farming business. And if you don't attract the new generations, the younger generations into the business, we lack that long-term development interest that would bring investment to the farm and bring the new sustainability practices and bring the new technology on the fields. So that's very important to be attached. And I've seen banks and clients, suppliers, trading companies, they are willing to help farmers with succession planning, bring in consultants and advisory to the farmers. That's really important job to be done too.
Thank you very much indeed. Another question I'd like to turn to briefly is on technical expertise, and it's a question directly initially at you, Gracie, from Minerva. You mentioned the need to increase technical expertise. How can this be done in a practical way, do you think?
Yeah, I don't think I have a good answer for that, Ian. I think it's everybody who can potentially gain some benefit from that happening, taking that responsibility for what they can do. So we already have federal, state, government, rural extension programs and activities which probably need to be better financed. But I think that when we talk also about the financial sector, both Veronica and Martha have identified the role that technical assistance plays in these funds. When you provide technical assistance, you are actually reducing the risk in that loan because you're increasing the chances of that implementation happening correctly and giving the financial return through the productivity gains. So I think it's really building these ecosystems of collaboration, and we're seeing this happen more and more. I think that everybody involved in this supply chain is really waking up to the opportunities and the risks, which have both been highlighted by this report, and are moving. So we've been talking about these kinds of things for a number of years, and at the moment is when I'm seeing real responses coming out from all the actors involved. So I think that it's really that collaboration that needs to happen.
Thanks very much indeed. Does anyone else want to comment on that? Okay. All right. Let me just think. We're coming towards the end of our time. I'm just looking at some of the other questions that have yet to be answered. So yeah, I think let's quick question on technological advances. This one maybe for Yara and Vicente in particular. So what are the key technological advances that you're looking to see? And then we'll maybe wrap things up. So to Yara, technological advances, what are the key things that you're looking for now?
Yeah, we are definitely working on precision ag here in our farm. We're starting to implement that and actually use it. So that's a big future for us. And of course, continue to learn and implement new technologies here on sustainable practices, the best crops for rotation, the best options for cover crops. And that's what we're working on. We're already doing, but definitely there's room for more knowledge and improvement.
Thank you. Vicente, anything to add?
Yeah, for me, the big technological leap that we're going to have in the future is in the soil. So nutrition basis, biological nutrition techniques that we're going to use in the soil to reduce fungi, to reduce insecticides, and help the plants absorb better the nutrients that are already on the ground, together with the cover crops like in the organic matter that we have on the soil, building soil structure, and using better products to help the plant absorb better the nutrition. For me, that's going to be the big leap.
Thank you very much. Niamh, let me turn things over to you. So we've heard a lot over the last 90 minutes now about different sort of transitions that are happening, different ways in which businesses and their value chains are engaging with them. What stood out for you from the last 90 minutes?
Yeah, I have to say the insights from all of our panelists have been really fantastic. I think for us thinking about this conversation, the important thing is that we continue having it. I think the conversation around the physical impacts of climate change is extremely important, right? And we are already seeing the impacts of climate change materialize in that way. And we know that the costs are even higher than climate transitions. But we do need to understand that climate transitions in themselves present really major financial risks and opportunities to these sectors. So I think hearing the insights in terms of some of the sustainable solutions, some of the actions that can be taken, and particularly around the cost of it, I think was really interesting. And then I think the other piece that stands out from the discussion as well as the questions is the need to mobilize more and more financing, right? That's something we cover in the report, but I do think that Brazil is really well positioned coming up to being the host of COP30 next year and then hosting the BRICS conference the following year to potentially mobilize even more financing for climate smart solutions. So hopefully that will be an opportunity to continue this conversation and really scale the preparation that Brazilian soy and cattle sectors can have under climate transitions.
Great. No, thanks, Niamh. Well, we've run out of time. Many thanks to our panelists for their insights, and thanks to everybody on the call for your questions. Some really great questions there. Thank you so much for your engagement. It's been a really fascinating discussion. Particular thanks to Orbitas for supporting this webinar. Now, we will be in touch with the audio and video recordings of the webinar in due course so that you can watch again if you wish and share with your colleagues. And we will send some links to the Orbitas research. But for now, though, thank you very much for joining us and goodbye.